Welcome to Markets Now. I'm Michelle Rook with Chip Nellinger, Blue Reef Agri Marketing, and we did see lower livestock and wheat futures today. Corn and soybeans to the plus side. And Chip, let's talk about the soybean market. Kind of a nice recovery. What do you think? Was this all about the president saying that we might get a deal with China?
I think it was the main story. I mean, all the news from the past week or two has been on the bearish side. You've got the Brazilian harvest advancing at a pretty good clip. They're still, wildly more competitive than us on the world market. But, that was enough, that bit of news from President Trump that maybe, just maybe, we are ready to make some sort of a trade deal with China really got the bulls back, on the buy side again. So it just goes to show you how each tweet, news story, anything regarding the tariffs or this trade news situation, especially with China, really gets a lot of emphasis immediately in the markets.
What is the market perception about the South American crop right now? They've gotten some needed rains in Argentina. Was it too late? And what's happening with Brazil and the harvest on soybeans?
It's, again, a little bit of a head scratcher. We have seen a correction in beans, probably more so than corn or wheat. I think the perception is that things are going well. You've got probably roughly 170 million metric ton crop in Brazil, give or take a million or two on either side of that. It's still a massive crop. We've hurt the yield potential in Argentina, but I think the rains in those dry areas have stabilized that. So even if it comes down a couple, 2-3 more million tons out of Argentina, I think there's an ample enough supply out of Brazil that we're going to have plenty of supply. But I think, to your point earlier about these index funds and the commodity funds, do we have another wave of inflation coming? Because that's going to kind of overshadow what should be bearish fundamentals from the weather and the Brazilian harvest picking up pace down there. We should be by all intents and purposes at a much lower level in beans than we're at. But we seem to be very resilient.
Let's talk about the corn market, because I'm sure corn got some help from soybeans today and the lower dollar, but certainly has been impressive that every break seems to be bought.
Yeah, for sure. I mean, just wildly impressive, because not only now you have this index fund inflation type buying, but the corn market seems to be the darling of the fund community. It's got its own bullish story fundamentally to begin with fairly tight stocks, especially across the world. And the traditional commodity funds are long 350,000 roughly contracts. And so it's got its own, unique story, and it has been wildly impressive. I just cannot understate how impressive that has been. Every break has just been met with a massive amount of buying, and you scratch your head saying a break's got to come at some point, but yet it just keeps going higher. So it's been very impressive in the corn market.
Yeah, but if you look at ending stocks, Chip, 1.54 billion bushels, that's almost what, a billion bushels off of what USDA projected at the beginning of the season. So we've had a lot of disappearance. Demand has stayed very strong too, hasn't it?
Yeah, absolutely. And until you get the second crop corn down in Brazil at their harvest time with those bushels hitting the world market, we're in charge. There's nowhere else in the world you can really go to get corn other than the United States. And that's a big benefit. To your point, prior to the January crop report, market thought, we've got ample supplies. Then you have almost a 4 bushel cut in yields. Demand still probably a little bit understated. I don't know if it'll be on this March report, but certainly somewhere down the road, you would expect USDA to increase demand just a little bit. Ethanol grind's still good. Our exports are stellar every week. And right now, we're the only source in the world for corn, and that's a great benefit to us.
We have also seen index fund money coming into any commodity, but corn, now soybeans seem to be enjoying that.
Yeah, not just the grain markets, but across the entire sector. Some of these beaten up soft commodities like sugar, even cotton, which is, probably the worst or the most bearish commodity out there, have seen bounces off the lows. And, you go back a couple of weeks, we had some higher than expected consumer price and producer price inflation reports. And I think that brought a lot of money in off the sidelines, kind of as a hedge against commodities, buying index funds, putting money maybe that was in money markets or on the sidelines, bring that in out of that passive investment into something more active that could be an inflation hedge. And that's certainly helped not only the grain markets, but, kind of the entire sector of commodities in general.
So the wheat market ended lower today. We made new highs for the move yesterday, and then we ended lower. And so we did see some follow through selling pressure today. But my question there is, are we removing weather premium as well with a little bit better forecast now with some warm up coming?
Yeah, probably a little bit of weather premium being pulled out of there. That was a bullish story for sure. We won't know for a while, maybe till harvest. There was much damage done from the sub-zero temperatures. I question though, coming in the end of the month, funds are still short. Index fund money coming in. Yes, maybe we need to pull back a little bit. Maybe we rallied too far too fast. But I'm still in the back of my mind wondering if you don't have higher highs yet to come in the wheat market, just as the funds exit their short position. They've been short for the better part of 3 years. They've made good money being short, but it seems like we're high enough level above the moving averages that the funds may be about done with their short position. End of the month will tell you more about that, though.
Yeah, speaking of end of the month, we've got March option expiration tomorrow as well as first notice day coming up, right?
Yeah, and that's always kind of a wild card too, especially when the funds have been as active as they are. Are they going to roll this position in the March contracts once you get the first notice day? Are they going to liquidate some positions? How is the open interest going to kind of change once the option expiration gets behind us? So always can be a very volatile time frame as you come into the end of the month, get an option expiration, and then a first notice day coming a week after that can be kind of a wild time and an uncertain time with price direction and movement.
Cattle market down here today in both live and feeder cattle futures. Are the funds continuing to liquidate here? Was this technical in nature, or are we gearing up for the cattle and feed report, or what?
I think a little of both, probably a little liquidation ahead of the cattle on feed. I think to the livestock, the cattle and the feeder cattle can be maybe a little bit opposite. We talked about the influence of the commodity, the index funds coming in, but the funds essentially kind of setting still close to record longs in both live cattle and feeder cattle. Coming into the end of the month, you probably see some further liquidation, but we really haven't changed or fixed the problem yet. We are not building numbers. Yes, the cash market has kind of trailed lower off the highs 2 or 3 weeks ago, but I just think that eventually here within the next $3 to $5, you likely find support, maybe get the funds liquidated out of what they want at the end of the month here. And I would just be shocked if we don't get at least a halfway to 2/3 of the way back to the old highs sometime in March or April. Just doesn't seem like the high comes that easy, if that makes any sense, that we saw a couple 2-3 weeks ago.
No doubt. And you've got the best demand period coming up here as the grilling season starts. The one question I have, though, choice boxes have continued to trail lower, even though the packers have cut kills to try to prop that up and their margins. That's a bit discouraging here for the market, isn't it?
Yeah, for sure. And so that's kind of tied in with the cash as well, I think. If you see some stability in the boxes, I think the cash market will stabilize, and then the futures will continue to rally or pose another rally. But if the boxes keep breaking, I think that potentially, that warns you that maybe demand has been hurt with those record highs of 2 or 3 weeks ago.
Gotcha. And hogs were down as well. Is that fund liquidation, or is that the lower cutout values, which have kind of imploded here the last couple of days?
Yeah, I think the cutout started first, but what it might do with the kind of the ugly technical action is it might produce a little bit of profit taking by the funds going into the end of the month here. But again, I think the demand base, just from a cheaper protein perspective from where beef is, and even poultry to some extent, gives us good support on any break that you're going to see going forward. And like you mentioned earlier, prime demand season's ahead of us, not behind us.
True. Thanks so much, Chip Nellinger, Blue Reef Agri Marketing. That is Markets Now.